Welcome back to Finweek Money Matters. Last week it was announced that South African technology player Mixit had bought out South African startup MoTribe. Now, while many in the venture capital place talk up this development, the reality is that South Africa's venture capital space remains very weak and underdeveloped. Is this development the start of something more, or will we continue to be mediocre here in South Africa? Joining us now on the line from Cape Town, Keet van Zyl, co-founder of AngelHub. Keet, great to have you on the show. First off, let's talk about the state of the angel investing space in South Africa, the venture capital space. As I was saying earlier, it is considered to be quite weak right now. Would you say that's a correct description?
Yes, I think weak is not correct. I think underdeveloped and with a lot of potential is how I would put it. I think there's a lot of momentum at the moment, and all these so-called isolated success stories like the Fundamos, the MoTribe, Mixit, all that, are starting to actually build momentum to build a more coherent success story.
Keet, it's Mark here. I mean, one of the things that we were talking about earlier is this ecosystem that the venture capital industry operates in. It seems to be very disjointed at the moment. There still seem to be little hubs of excellence, but there seems to be a real battle to narrow the gap between funders and quality entrepreneurs. I mean, do you think that there's been improvement over the last year if you look at the so-called ecosystem in South Africa?
Yes, I think it took us quite a while to build partnerships and ecosystem. I mean, that's quite a big word and quite a buzzword. But I think we are working together with as partners in this ecosystem to build a category and to kind of laud the success stories and work together. Yeah.
So Keet, basically, I mean, that's what AngelHub is looking to do. You're looking to bring the funders and the entrepreneurs together. Are you getting a lot of applications from entrepreneurs, and then at the same time, are you also getting funders coming to you, people who have money to spare, people who have money to perhaps invest in startups and saying, we don't know what to do with this money, can you help us?
It's not quite like that, but yeah, I think quality of deal flow has never really been an issue in South Africa. I think it's a disrespect to all the entrepreneurs out there. So we're not really worried about deal flow. I think the issue with the gap on the entrepreneurial side is more the support services or helping to put that package that good deal in front of an investor in a way that they can actually access it and stuff. So it's more of skills, support services lacking there, not really quality entrepreneurs. And then on the other side, there are angel investors. I mean, angel investment is bigger than venture capital in most part of the world, and all these deals happening unless you know someone who is an angel investor. How do you access that? So we kind of playing the switch in between, but also become more actively involved. So it's not an introductory portal. It's more a way of looking at what is needed to build a high growth startup and build all those building blocks in place to make it succeed.
Keet, this is Jessica from Finweek here. I spoke to Alan Craig Jr. earlier in the year about this, and he commented that many criticize South African entrepreneurs for being very risk averse. But he argued that it's not the entrepreneurs who are risk averse, it's more the investors who are risk averse. What's your take on that?
I think it's a case of supply and demand. I mean, and I think the South African venture capitalists have taken a lot of flack over the years for that. But if you have 100 business plans in front of you, and 2 of them are already scratching revenue with big potential of expanding into Africa and that, and the other 98 are still concepts, then you would rather invest in those 2 to mitigate the risk. So yes, it is a case of the funders being risk averse, but it's also a case of common sense, I guess.
Both sides of the coin. Thank you so much for joining us today, Keet van Zyl, co-founder at AngelHub. So, talking about this issue of risk, I would argue that South Africans, when it comes to the entrepreneurial side, are quite risk averse. When you compare us to countries like America, where everyone has got ideas, everyone's sitting around a table saying, how are we going to create our own business?
Look, in South Africa, there's a thing that says in South Africa, if you start a business, you only fail once. If you fail once, you're out of the game. And I think that's from a banking perspective, in terms of that being a traditional lender into the entrepreneur space, they don't want somebody that's failed. So you therefore don't fail. And the problem with an entrepreneur is that you're probably going to fail 3 or 4 times before you find, if you're lucky, a business plan that flies. So I think that's still, you've got to differentiate between the traditional sources of funding and the non-traditional, which you'd probably put something like venture capital in. I think one of the things that we still lack in South Africa is that the the pool of entrepreneurs with big ideas is quite limited in that it does come down to who you know. You don't necessarily, and those are the people that get the interviews. I mean, I've chatted to VCs, and they will see business plans from guys who want to reinvent the internet out of Klerksdorp. I mean, it's not practical. But so you end up having to sift through a lot of those big impractical business plans, trying to work out, is there a real entrepreneur in here? And maybe it's a case of bringing groups of people together. I think also South African entrepreneurs tend to be quite, it's my idea and nobody else gets any benefit from it. So I think that's a risk. You decide, is it, do you want 100% of a million rand business, or do you want 10% of a 100 million rand business? There's you got to weigh that up when you're talking about risk. And
especially when you're looking for funding, because I suppose if you're talking about private equity, they're looking for big deals basically.